Well, I think we've still got a few people coming in, but I think it looks like we've got the majority on the call already. So good morning, everyone. Thank you very much for joining us today. This morning, as you all will be aware, Ofwat published its draft decision on its inaugural Totex reopener process, which is, of course, the topic of today's call. The format for the session will be a brief presentation by our CEO, Louise Beardmore, and CFO, Phil Aspin. And then I think we'll have plenty of time to take questions at the end of the presentation. So with that, I'm going to hand straight to you, Lou, to kick us off.
Brilliant, great, thanks Chris, and thanks ever so much for everybody joining this morning. I'm conscious there's a lot going on. You'll be pleased to know we'll keep this brief. We've just got a couple of slides that provide some of the overview, but more than anything, as Chris said, this is your opportunity to ask any questions that you may have of us. So look, Ofwat this morning have published their draft decision. That's completely in line with our expectations. That gives us an allowance of 975 million. And what I'm really pleased to be able to report is that Ofwat have supported the majority of our first year's unpaid submission, so 97% of the scope that we put forward. That leaves us in a position, with that first one of this annualised reopener process, in terms of being on track to deliver that £2.5 billion worth of additional growth that we identified back in April when we updated our guidance as we go through that coming annualised process. I think what we're really encouraged to see this morning is the supportive regulatory backdrop and the fact that we've been talking about the benefit of this annualised process as we move forward. Because more than anything else, it gives us the ability to respond to new and emerging needs as they come through. And there is a huge amount that's happening here in the North West. So the fact that we're able to put these in-year adjustment claims in is a really strong position to be in. I'm really pleased that we've seen our asset health submission virtually approved in full. We've seen our Windermere submission approved in full. So there's some real positives. And I think what's great about that asset health submission is that this was a sort of key legacy of Sir John Cunliffe and his recommendations about the need to make sure that there was greater investment in base assets. We've got some ongoing discussions to have with Ofwat in relation to funding of industrial growth projects and specifically HyNet. HyNet is a government-based project, a series of partners, and we're in active conversations with both the government and Ofwat around that project specifically. I suppose more than anything else, positively, it gives us the ability to sort of stand back, be very clear, and reinforce the guidance that we provided back in April. The capital investment of circa 11.5 billion, the asset base growing to 25 billion by 2030, and those regulatory returns of 10 to 11%. So look, on this next slide, I just thought it would be helpful to just provide that bridge in terms of some of the numbers. I'm conscious there's a lot of data, as always, out this morning. So as I've said, that £975 million worth of Totex that's been approved. Obviously that's real, 1.2 after inflation. What is really encouraging is that Ofwat have been clear where they're looking for additional evidence, what the evidence is that they're looking for. And again, this is a bit of a step change that we've seen compared to submissions in the past. The team are already on with pulling that information together and providing that evidence pack. And then also, we're very clear around these future submissions. And we talked back in April about the fact that scope would be fluid, it would move around. But actually, we're really clear, and more importantly, we have got total visibility of what that scope looks like and what that opportunity looks like as we go forward. And therefore, we shape each one of those reopeners accordingly. We're already in conversations with Ofwat about what's going in the 2027 reopener process. And I just thought it'd be helpful on this next slide just to remind everybody of what was said, and also some new themes that are coming through as well. So as part of those additional submissions in future years, and just to reiterate, this is all consistent with the guidance that we previously provided, is that we've got a huge amount of growth that's coming as a result of the defence investment that's happening here in the North West. and particularly the shipbuilding programs that are happening up in Barrow. The proactive asset replacement. So as I said at the beginning, I'm really pleased to see Ofwat taking such a positive step on asset replacement. But also, as I said, we're already in active conversations about the asset classes that they're looking to see and starting to build those evidence cases. And as well as that, we've got some new requirements that have come through too. So only last week, we were in a meeting with the Drinking Water Inspectorate and the Chief Inspector, Marcus Rink, and DEFRA, who are now calling for an additional submission around cyber resilience and security. So an additionality to what we've talked about. And all of that, as well as the opportunity around what we take from AMP9 and bring into AMP8 to make sure that we continue to smooth that supply chain cycle. So a sort of positive start to the first submission that we've put in. Great that they've identified that need and that scope. Now an opportunity for further dialogue and conversation. Just thought it'd be helpful to outline the process and the timeline. So obviously 13th of August today, we've got to go back by the 24th of September. And then we've got a final decision that is due just before Christmas on the 15th. And then, as I said, we then get into the annualised reopening process. So it's a cut and repeat as we go through each of the following years. So with that, I'll probably hand over to Bill just to reiterate guidance.
Thanks, Lou. Good morning, everyone. As was already said, effectively, we're really pleased today to be reaffirming our guidance set out in our financial framework and just calling out the three key items here. So regulatory returns, 10 to 11% nominal, the 10% compound growth rate in our asset base, and the value of 11.5 billion of capex. And as you all know, a very strong balance sheet with gearing in the bottom half of the 55 to 65% range, securing a robust set of credit ratings and good access to the capital markets. So with that, I guess we'll pass on to questions.
Phil, short and sweet and to the point. So first up, we've got Pavan. Would you like to ask your question?
Morning, everyone. Thank you for the quick presentation and for taking my questions. I've got two to start with, please. Lou, I appreciate it's obviously early hours, let alone days, but based on what you've seen so far, what do you think the key issues are that you need to be getting through with Ofwat areas where you were maybe a bit more disappointed or where there were challenges to what you submitted? Would be great to hear your thoughts there. That's my first question. And then secondly, maybe on the flip side, looking differently at what they've approved overall throughout the sector, or you mentioned in your last slide around cyber, are you starting to see any areas of opportunity that you think could provide even more upside to what you guided us to earlier this year? Those are my two questions.
Okay, thanks, Pat. So I'll take the second question first, if you like, and then flip it around. Probably too early to have a look at what everybody else has done. I think from what we can see, we seem to have done very well in terms of what we've got approved, and that's really encouraging to see. And Ofwat were sort of very complimentary when I spoke to them last night about the quality of the cases that we put forward and the engagement with the team. And I think that's really good. And I think the fact that they've approved a £975 million worth of the scope, I think is reflective of the fact that we put the right things in and around where those investment needs were, and also have been clear, if you like, about the route to delivery. In relation to where do those questions come from, I think there's one area really, which is where we've been talking to Ofwat, and we will have those conversations, which relates to the certainty of funding around industrial growth and specifically HyNet. So if we take that 975 million that we've had allowed at a scope level, we've got 715 million where there is certainty of funding. There's 260 million where we need clarity on funding, and that's because it's HyNet, it's a government project, and there's multiple partners. And so we're having conversations with those partners about what that funding is. I think just from your perspective, there will be no, that project won't be proceeding until that clarity is sought. And then the question that you asked around opportunity, I think, the reason that we went out, we did the raise, we were very clear around the guidance that we put forward was that we could see where this opportunity was. And I think the fact that so much of our scope has been approved is a reflection of our understanding and the ability to make sure the submissions that we're putting forward are aligned with where those needs are. And, we are seeing additional things coming in all the time. Like I said, only last week around cyber. So we always talked about that this would be fluid, things would move around as projects and programs move around in terms of broader economic delivery. But, where we sit today, we're confident with the guidance that we've given, and more importantly, the fact that we've got visibility of what can be in each of the hoppers.
Great, thank you.
Terrific. Thanks, Pav. Jenny, over to you next.
Thanks very much. Good morning. If I can hone in on the HyNet 260 million spend a bit, please. As I understand it, the funding structure is not secured as we stand, so this project could effectively be funded by industry themselves, in which case you may not need to spend the money. And also just on a like-for-like basis, I think there's quite a lot of confusion this morning because of also the 1.4 billion that you submitted had rapid projects in it which needed to be taken out, etc. So on a like-for-like basis, if we look at what's been approved this morning, i.e. the 975 less the 260, what is that number comparing to what you've submitted? Because some people are saying the Ofwat has allowed all of the bulk of your ask, but I think it's not apples to apples. So if you can help us to dissect that a little bit to put it to apples, that would be helpful. Thank you.
Yeah, okay. What I'll probably do, I'll get Phil to just talk through the growth chart. If you could just pull that back up, because just in terms of we've tried to do that for you, Jenny. If we can just if my team can just re-put in the presentation, and we'll step you through the activity, the bridge, if you like. So if we can just re-display that presentation slide. What isn't helpful here is we've got real and we've got nominal. And you're right. This is also rapid, as you can see here, is going through a separate mechanism in terms of that approval process. But Phil, do you want to just talk us through the bridge between the two?
Yeah, I think I'll probably just try and keep this quite simple, Jenny, if I can. But I mean, you've already highlighted the 260 million, which is in the sort of 975 at the start of here. So effectively, there'd be an extra block in there to sort of pull that out. So as you say, that is subject to ongoing discussions around funding certainty, and the investment will only happen if we've got clarity around funding certainty and delivery routes effectively. And that's the main area of ongoing discussion. And as we talked about in the presentation, when we actually set our guidance back in April, we were very clear that this was an area of uncertainty and that projects would come in and go out of scope through the period, and that this is the first stage of a number of reopeners. And in setting the 2.5 billion to Totex and the 10% CAGR, we did a number of scenarios looking at what may move around in that process, and we're very comfortable with the guidance we gave. And so that position is reiterated and reconfirmed today, really.
So, sorry, just on that, if I may. So the 1.4 billion you talked to include 80 million of rapid, and that was in nominal prices. So if we take off the 80 and deflate everything, basically your ask going in without the HyNet piece is about 1.1 billion. And what you've got approved in the 975 is with HyNet inside. Is that correct?
So that's the approval for the expenditure. So Ofwat has confirmed the need and scope and approved the expenditure. Effectively, the sort of component that goes into the RCV is lower by the factor of the 260 you pulled out in terms of HyNet. And that gives clarity of the route of funding for those projects. The HyNet is what needs clarity around funding route at this stage in the ongoing discussions. And as I say, that was something we were very conscious about going into the process. And we've talked as we have through the process around projects moving in and out of scope through the period. And that was something we factored into our guidance at the stage we gave the guidance back in April.
Okay. Thank you very much, Jenny. Ahmed, your insightful questions next, please.
So I have a very similar question to Jenny, but more from a RAB impact perspective for 2030. So I see where in the table where Ofwat mentions the 7.715, they also mention a RAB impact of 668 for March 2030. So I'm assuming this is excluding the high net of the 260 million that we have been talking about. So as and when that sort of gets approved, should we consider that as an additional element to what I see in this sort of table 2 of the draft methodology? So just to clarify that. And then, I mean, just maybe a sort of a broader point, where would you you seem already that it's a positive first step. I mean, I understand the 260 million point on high net. Where else would you be seeking improvement in terms of in the run-up to the final determination of this? Thank you.
Do you want to pick up the first question, Phil, and I'll do the second one?
Yeah, I mean, I think you answered your own question there, actually, Ahmed. I think you're quite correct. But the revenue allowance of the 975 compares to the RCV adjustment of the sort of 715, and the 260 difference is high net. So effectively, you can see the allowed expenditure has got a certainty of funding for the RCV component, but the ongoing discussion is around certainty of funding for the high net piece that underpins the investment effectively. And that will be the main area of discussion. So Will, do you want to pick up other areas?
Yeah, I mean, Ofwat have been quite clear in terms of areas where they're looking for additional evidence. We've got 2 specific sites where they've asked for additional information. I think what was good was that our costs were put in line with their models, and again, I think that was reflected in what we've seen come back. So again, I think that's encouraging. So again, it's the evidence cases that they've asked for. They're just looking for specific information. So we will be going back and having that backwards and forwards conversation. So there's 2 specific sites that we're particularly looking at that we think the interpretation requires some element of challenge. So we're having that specific conversation, and obviously we'll be doing that over the next couple of days.
Okay, thank you.
Okay, thank you very much. James, over to you.
Morning. Congratulations on the award. I had 2 questions. The first was related to bills. So I was wondering whether you could just clarify the position on bills, because Ofwat kind of hasn't allowed any bill increases already, but I think your plan was to defer that request until the license change has gone through.
Yeah.
So maybe you could just clarify your position, and are you confident in getting revenues in this period to cover the additional expenditure? And then the second question is on incentives. And I was wondering whether you could just clarify on Totex and ODIs how this impacts on incentives. I think the position is that there isn't scope for Totex outperformance on the new CapEx, and I think the position is that they might adjust the ODI targets, but maybe you could just clarify if that's correct or not. Thanks.
Yeah. So first thing on revenue, James, you're absolutely right. We didn't, we were clear, I should say, as part of the submission that we put forward, is that we would wait as part of Ofwat consultation that they were doing and have those conversations about revenue allowances, because obviously you may or may not have seen it, but Ofwat launched their licence change consultation last week. And therefore we were explicit as part of the submission that we put forward, is that we would have those conversations as part of that consultation process. So that's exactly what we're doing. In relation to Totex, yes, there doesn't look like there is outperformance opportunities. And I think ODIs, it's not yet clear. We're just working through the documents. We probably know as much as you do at the minute in terms of working through the absolute deliverables, in terms of where they are. If you look at the things that we've put forward, they're probably less about ODI benefits, if I'm honest. They're around additional capacity into the system, additional water resources, additional wastewater capacity to enable homes to be built and growth to happen, as opposed to specifics of things that you might be doing that would then drive a specific ODI outcome. So again, we're going to be working through that in the next couple of days.
And James, just to build on Lou's point about the licence change, obviously we're a little different to others because our submission was probably 1/3 asset health and 2/3 growth, and the licence change conditions required to facilitate the sort of revenue allowance for growth reopeners, which is what the purpose of the consultation is that we referred to. So effectively, it makes sense for us just to wait until we've got that through to then submit one sort of application for revenue uplift. And that's an ongoing conversation with Ofwat. And as you can see from the tables, Ofwat have allowed circa £200 million of revenue adjustment at the end of AMP, but we'll be seeking to get as an in-AMP allowance as we move forward.
Great. Thank you very much.
Thanks, James. Dominic's next.
Thanks, James. Dom?
Hi. Yeah, thank you everyone for your presentation. A couple of questions from me, please. We'll put more like 3 or 4. First one, the HiNet one. Can you just remind me on the timeline expected for a decision? Is it realistic that we can get something through before December the 15th for your final, or is this going to be sort of a permanent rolling sort of addition? Secondly, on the sort of the accounting of this, could you just help me out here on this one? So first of all, you get no revenue announced in period. How are you going to be accounting for it in your IFRS accounts for the cost of finance and depreciation? Will you be capitalising this, or is this going to be sort of an earnings drag through until you start to see the revenues sort of kick in? And I'd just say probably and on that issue, could you just explain to me why the RAB is growing slower in your reopeners? I think it's 685, whatever it is, a RAB increase, when your actual expenditure is going to be significantly higher. The only thing I can think of is maybe there's a revenue adjustment coming through, and the cost of capital that you allowed on it, I presume, is kind of in the mix, rolled up, and then we're going to have to model a revenue higher than the FD in AMP9, I presume. Is that how it's going to be working through? So they're my sort of questions.
All right. I'll pick up on the first one. So in relation to timeline, which is probably the easiest question, in relation to timeline, Tom, as you can imagine, we've got a new Prime Minister and therefore a new team. HiNet has a number of partners. People are extremely committed to enabling HiNet to be delivered. That's part of the sort of strategic growth here in the Northwest. So, that is continuing, and those conversations are continuing. I think what is important is that Ofwat have approved the scope. So they've approved the scope, but actually, recognising that government here is the biggest customer in this case, we've got to just work through that timeline. In relation to accounting, Phil, and particularly IFRS.
Yeah, and I suppose just coming back from the HiNet, just to build on it a little bit, I think, as well. I think, clearly, Dominic, you asked about the 15th of December, and what will be key for the 15th of December is understanding the principle of Ofwat as to the route of funding around HiNet. And, that's needed to guarantee the sort of the investment profile effectively. So without certainty funding, it's difficult for us to proceed with the investment. So that will be the main thrust of the conversation. On the accounting, you're quite right. So currently there's no revenue in period sort of in the determination, because that's part of an ongoing conversation and it's something Ofwat are aware of. So we do expect that to change, and that will be the 200 million that I sort of referred to James. You asked how the accounting will be done for the assets. It would just follow standard IFRS accounting. So all the investments is effectively capital investments, so they're capitalised. And as is standard under IFRS accounting, you also capitalise interest in relation to financing costs for assets. That's the standard approach, effectively. So that won't change. And then I think you had a question around the difference between the RAB, and I think it was effectively between the sort of circa 685, 715, there's a couple of different numbers banding around, and the 975 of allowed expenditure. And I think that is effectively the high net sort of 260 million we've been talking about. So with Ofwat have approved the allowance of the 975, that includes the 260 of high net, which means that the balance goes into the RCV and has a secure funding route. The 260 is subject to ongoing discussions around the clarity of funding route to support that investment, and that's the main area of discussion. And then there will be other PR29 sort of adjustments that will be made, such as the 200 million on revenue at the moment that will go into PR29 as we roll forward if it's not taken with revenue in period. So probably quite complicated. I think in these very early few hours post-determination, that's probably about as good as I can guide on at this stage. We'll be able to have more detailed conversations in coming days.
Yeah, thank you. I mean, the question wasn't the high net on the difference in RAB increase and your total expenditures. It was on a like for like. There's a 50 million gap, but I presume that will be rolled up into the 200 million of revenue into PR. And just finalise on the accounting on this one here, the annual performance reports that you will publish, the expenditure on these will be in your shadow RAB, or will it actually go through into your main RAB and into the accounting?
I think it probably be shadow RAB, but point of detail I need to check on Dominic.
Okay, thank you.
Okay, no more questions. Thank you all for your time today. Lou, over to you.
Great. Look, thanks ever so much. Early days, we'll continue to digest. I think, we've got a sort of series of meetings in the sort of days and weeks ahead. We're pleased to see the scope being approved to the level that it has. We're now in conversations specifically with government regarding HiNet. And as I've previously said, we're now actively on already with engaging with Ofwat around March's submission, and more importantly, making sure that is equally as high quality. So look, we will no doubt continue to exchange questions in the days ahead. Chris, Jenny, the team, we're all here to answer those, but I'm conscious there's a lot on, so we'll let you off the call. But many thanks for your time this morning. Thank you.
Thank you, everyone.